Hi everybody, this is Ospreyeye from MyChartCoach.com, and we're going to take a look at two ticker symbols in this video. Okay, first up there's going to be MNKD, and this is a stock that's been on a multi-day run. It started last Friday. We put out alerts when it was in the 94 range here, when it was below the middle Bollinger Band, and it was breaking EMAs 4, 8, and 13, and then what we were looking for was a close above the middle Bollinger Band. That happened on Tuesday, and then today there was this big follow through with our hitting our next targets, which were the 50-day simple moving average, which is the green line, and then it did bust through the upper Bollinger Band. When you get a stock that starts at the lower Bollinger Band and then it breaks the middle Bollinger Band, the upper Bollinger Band is always the next target. And as you can see here, the close today was above the upper Bollinger Band. That's signaling that the move was frothy, and that the candles might work their way back into the bands. If you notice here, there was a long upper wick on the candle that shows profit taking. And then if you look at the big volume bar here, this looks like a climax spike. As you notice here, there's 5 green volume bars in a row, followed by a break here above the upper Bollinger Band and the 50-day simple moving average, and then a pullback from the high with the close still well above the upper Bollinger Band. Many times this is signaling a climax. Another reason why we were thinking that this could be hitting a top here is the bearish 3 gaps up pattern. Notice there's 1 gap, 2 gaps, and then today there was the 3rd gap. And so this was a signal that the chart was getting frothy. When you get 3 big gap up opens in a row like this is signaling that the chart is, the stock is getting ahead of itself, and that it might need to pull back. If you look up here at Fasto, it did correct from overbought levels. And then if you look at RSI, it's not quite hitting 70 yet. It's here at 66. So RSI isn't hitting the overbought levels yet. What's going on now is, everybody knows, mankind pulled back in after hours trading. There was the conference call and discussing the ER and the earnings report. And so just for everybody that's trading penny stocks, just so that you know, this is just the saying. This is trading penny stocks 101. The saying is that never hold a penny stock into a conference call. It's just bad news. You just don't do it. And so usually bad news comes out in conference calls, usually bears raid. As you can see here, what happened, there was a multi-day run leading into the conference call. So what is that set up? That is buy the rumor, right? Everybody was buying the rumor. And then today, once the conference call started, it was sell the news. And so this is a pattern that repeats over and over again. So if you're going to trade penny stocks, not only do you need to know the chart patterns, but you need to know the patterns on how these trades work. There's a lot going on that's not just on the chart. And so it's all about experience and time, and if you put the time and effort into it, you'll figure all this stuff out. If you want a little help on learning more, come join us in our chat where we teach every day. So what's going on now is we've got a pullback here with the candles pulling back to the take a look here at this 15-minute chart. And so in after hours trading, MNKD I believe closed at 127, and so this is a 15-minute chart that we've been working on. And as you can see here today, there was this breakout higher, and then it consolidated sideways, and then we were looking for either it was going to break out or break down. Notice there was this ascending triangle pattern, and the key level to break was going to be this close at 12 o'clock, and that did happen at 3. And so that was the big breakout candle, and we were thinking that it might possibly run up here and test the high of day. And what happened was, on level 2, you could see they started dumping shares. Notice there was the big volume spike, and followed by a big red volume bar. And so that was our clue that they were dumping into the run. And then once we saw the the big volume going through in the 180s, we put out alerts that it looked like they were dumping into the end of the day there, locked them in before the conference call, and then all of a sudden this big sell-off on the last 15-minute candle happened. So it was good. Everybody got the alert to lock them in and to not get hit by a pullback. We alerted our members in the 180s, and as you can see, it dropped down to 127 in after-hours trading. So for $20 a month, you could have saved yourself a lot there just by being in the chat and getting the early alert. If you notice here, there was this big red volume bar. If you didn't get out on our 180 alert, you definitely should have got out on the break below the middle Bollinger Band. Notice the middle Bollinger Band here broke. That was a signal of downside risk along with the big red volume bar. So yeah, things changed quickly. Things were euphoric and looking good right here, but then as soon as the dumping happened, it was time to change the game plan. The bottom line is just don't hold into a conference call with the penny stock. It's just never a good idea. And so now you got the share price pulled back down here into the 120, 122 range. If you look here, this is the zone that it's back at. It's at 127. So what you want to do is you want to see this 120 turn into support now that it's getting hit for the bulls. If that breaks, you're going to see a drop much lower. We'll have to see what happens with pre-market trading. It could rally back up. This is just going off of what happened after hours. We'll have to look at the chart. It looks like there's going to be a gap down open tomorrow, and if the middle Bollinger Band turns into resistance, it's going to signal more downside risk. Candles forming below the middle Bollinger Band and the 50 simple moving average on the 15-minute chart do signal the stock's in a downtrend. Candles need to be forming above both those levels to be back in an uptrend. Okay, so we will be charting the action, and we will be following it for the MNKD bounce play. So we'll see what happens tomorrow. Going back, if let's say that the whole thing is it's still all about this 50-day simple moving average. It's this green line here. It needs to turn that level into support, currently at 150. If it could turn that level into support, then we'll be talking about the 100-day simple moving average at 230. If it pulls back and it does have this gap down open, it's going to be all about holding this middle Bollinger Band currently at 101. So bulls, you want to see that hold. As long as that holds on the pullback, that's going to be the reload level. If it does pull back and get tested, as long as it holds, and then you want to see it bounce off that level. So we're looking at if the 50-day simple moving average turns into resistance, we're looking at a potential pullback all the way to $1. So that's another 27 cents lower. $1 is a big level in penny land, and so it's going to be paramount that it holds. If the dollar level breaks, and along with the middle Bollinger Band, and candles start forming below, it's going to be continuation of this downtrend. Look at this nasty multi-month downtrend here. So it's very, very important that the middle Bollinger Band holds. So we will be tracking the bounce play. Please follow us to play along. Okay, now we want to look at WAC. Okay, this is a stock with we think has upside potential. It did close up 27% today. We have been alerting this play. We were on it back here on the big move on May 1st, and then it consolidated back. It has an uptrend going. Candles are forming above the middle Bollinger Band. We were looking for a bounce off the middle Bollinger Band, and then that did happen today. It did hold, and then this is a chart that we are working on today in our chat, and these are some of the bullish developments. You can see here RSI broke above 50. Now it's at 58. It still has room to run until the 70 overbought level. So this is a signal that the chart's heating up. You've got Fasto that broke above 50 as well. Notice it started the day below 50, and then now it's back above 80. If it can stay above 80, it could, this is a signal that the chart is heating up. It is in the overbought zone right now in Fasto. We'd like to see that stay above that to push higher in the what we call the power zone, if it can hold that level. There was a bullish development on Plus DI. You can see it had a bullish crossover on 80X. The green line crossed the black line to the upside, showing the bulls are in control. And then what we were looking for during the trading day was a close above the high close here on May 1st. And then also above the 50-day simple moving average, which is the green line, currently at 1.466. That did happen today. There was a close above both levels. So you have a close above high close horizontal resistance and the 50-day simple moving average. That, my friends, is the bull signal. That does signal more upside potential. Okay, so just like MNKD closing above the 50-day simple moving average. That is the bull signal as well, but it looks like it's gapping down below that. And so, going forward for WAC to be a good play, it needs to stay above the 50-day simple moving average. If it pulls back below that level and closes below that tomorrow, that's going to signal downside risk, and you could possibly see this gap down here fill. That this is the one red flag on the chart currently. There's a gap between high of day yesterday and low of day today, and so if it does pull back, you could see that gap fill. If you notice here, these are both Marabuzos. There's no upper wick on this candle and no lower wick on this candle. The bulls, the share price never dropped below the open today. So the bulls were strong throughout the day. They did have a earnings report and a conference call pre-market today, and then the share price did head higher after the conference call. So that's always a good sign. And there was also an analyst upgrade today for WAC. So these are all catalysts to push it higher. What we do like is this big volume spike. Notice the big volume behind the move. That's always a good sign. So there was this load candle here, and then now there's more conviction and more people loading. We also like this bullish crossover on the 8:13.5 time frame, and so that's another signal the bulls are taking off. Notice the 1226.9 is still strong, and the parabolic SAR is still bullish. The candles are forming above the middle Bollinger Band, so there is a good uptrend. So now, take a look here at this chart. This is looking at WAC in a little bit longer time frame. We're looking here at a 3-month chart, and what you can see here is this close above the 50-day simple moving average. Notice how there hasn't been a close above that level for a very long time. The close wasn't very big above that, and it was also above the upper Bollinger Band, and so that is a red flag. If you notice, the last time there's a close above the upper Bollinger Band, the candles work back into the bands, but in order to break out higher, you have to push through that upper Bollinger Band and start riding EMA4 support higher, which is down at 132. This is the key level now that we want to see hold. As long as candles are riding EMA4 support higher and they stay above the 50-day simple moving average, we see more upside potential. We want to see a break above this 160 to 170 zone here. Okay, this close down here, if it can break above that, notice how this was a big candle. You could see a run up here and fill this gap. There's a gap here between the low of day on this day and the high of day on low of day on the 13th of March and high of day on the 14th. And so if the 50-day simple moving average turns into support, there could be a gap fill and a run to the 100-day simple moving average, which will be our next target at 279 if the 50-day simple moving average can hold. Notice there has been this nice uptrend off the bottom. Notice there was a big loading down here, so lots of loading at the bottom, and now we've got more loading to follow it up. This was the biggest volume day since back here when players were loading on the big drop. So so we're thinking this could keep pushing higher. It just needs to hold on to support and keep pushing through resistance. Okay, if you like this video, check us out at mychartcoach.com and our YouTube channel at mychartcoach.com. Thank you.